Today on Fear and Greed, financial markets brace for the US election and the Reserve Bank's decision on interest rates. Prime Minister Anthony Albanese makes a bid for younger voters with a $16 billion plan to forgive debt. And the housing market wobbles continue with the lowest auction clearance rate for the year over the past week. Plus, a massive ChatGPT trial gives AI the thumbs up. And the UK Conservatives appoint a black woman to run the party for the first time. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 4th of November, 2024. I'm Michael Thompson, and good morning, Adam Lang.
Good morning, Michael.
Adam, the main story this morning, financial markets are bracing for a very volatile week, it must be said, with the US election set to drive equity and bond markets and have far-reaching implications for economies like Australia, especially around trade.
Yes, Michael, it's expected to be the tightest election in many decades, though betting houses actually have installed Donald Trump as a favourite. Investors would not mind a split decision. By that, I mean a stalemate in Congress with one party holding the Senate and the other holding the House. That could potentially mean a stalemate, and investors wouldn't mind that. A Democratic sweep led by Kamala Harris winning the presidency is considered an almost 0% chance. A Republican sweep with Donald Trump in the top job is considered a 25% chance, and that would likely help equity markets, but also send bond yields higher and interest rates would stay higher for longer. Are you with me so far, Michael?
So far, I'm actually furiously taking notes here because look, I love the politics kind of side of it all, but in terms of the impact on financial markets, there's a lot more to it. It gets quite, I was about to say quite intricate. I almost said intimate, and that is definitely the wrong word. Intricate,
well,
yes.
Yeah, it's definitely intricate and strategic. So that sort of outcome with Donald Trump in the top job, that 25% chance, that would help equity markets as bond yields would probably go higher with those interest rates staying higher for longer. That would not be good for the Aussie dollar in the short term and Sean's US holidays, but it might be good in the longer term for the currency on the back of ballooning US deficit. Now, it's fair to say that this campaign has been very ugly. There's been little respect shown on either side, and that points to things like the assassination attempt on Donald Trump and the dumping of Joe Biden for Kamala Harris are almost no longer part of the campaign. It's just quid pro quo at the moment, Michael, as we come to the final moments of the vote.
Yeah, it's been an extraordinary campaign. And just to make something abundantly clear, you did mention Sean's US holidays. He's not on a US holiday at the moment. He is away for like half a day. He will be back for the afternoon report this afternoon. So fear not.
Yeah, parental duties, not a US holiday.
Yeah, indeed. Bring it all back home to us here, Adam. The bottom line, what does a win for Trump or a win for Harris mean for Australia?
There's a lot depending on what actually happens after they get in because the words are really hard to sift through. If Donald Trump wins and follows through with a 20% tariff across the board, then that would obviously be bad for Australia's $13 billion of exports to the world's biggest economy. He also said he'll water down the massive Biden administration Inflation Reduction Act, and a number of Australian companies have actually benefited from that. Harris, on the other hand, wants to lift the corporate tax rate and Trump wants to lower it. They both want to increase taxes on buybacks and companies' foreign income. Harris wants a tax on billionaires and high-income earners, as well as assistance for small businesses, housing, healthcare, and parents. Harris will also maintain assistance to the Ukraine. Trump wants to end that assistance to the UK, and there's some smaller tax breaks as well. There's a lot in this mix, Michael. Probably the biggest impact on Australia comes via the performance of the US economy. We haven't heard much about the economy in the election campaign, but the US is actually doing well. The strong labour market, inflation and interest rates are falling, and solid growth is underpinning this economy. That's the biggest economy in the world, of course, and our wish that would be that whoever wins, that can keep going.
Yeah, now while the US election is going to dominate this week, of course it is, we also, though, Adam, have the Reserve Bank Board meeting today and then the decision tomorrow afternoon, 2:30 p.m. on interest rates.
Yes, Michael, just ahead of the Melbourne Cup horse race, which we know Stephen Koukoulas will be paying close attention to, that Reserve Bank meeting and the announcement is very important for the economy. After last week's September quarter inflation figures, where the headline rate fell below 3% and the underlying rate came in at 3.5% for the year to the end of September, no one actually expects the RBA to cut rates, but it might soften its language and suggest the next move in rates is more likely to be down rather than a hold or even up. At the moment, the RBA is sitting on the fence, saying it doesn't know which way rates will move next. It wasn't just the inflation figures that could convince the RBA to think about rate cuts. The retail trade data for the September quarter also showed a slowdown in spending on a per capita basis, and that adds to the argument for a rate cut. The good news last week was the apparent pickup in building approvals.
We are in for a massive, massive week this week, and I'm actually quite excited about it. We've also got a big show today. We're only just getting started. We'll be taking a quick break, and we'll be back in a moment with the rest of the day's business news. Adam, the housing market continues to slow with auction clearance rates hitting their lowest level for the year over the past week on the back of data last week showing house prices going backwards in both Sydney and Melbourne.
Michael, it is the selling season. There were just under 2,000 auctions over the week, and that is a sharp reduction from the previous week because of the reduced numbers in Melbourne amid the spring racing carnival, which is obviously enormous there. The combined capital's preliminary clearance rate fell to 63.4%, down from 66.8% the week prior. The final clearance rate for the previous week was 59.5%. The finalised auction clearance rate has held below 60 for 3 of the past 4 weeks and is likely to do so again when the most recent information is finalised. Sydney hosted the most auctions this week with 1,046 homes going under the hammer. The preliminary clearance rate came in at 64.5%. There were only 473 auctions in Melbourne, and that preliminary clearance rate was 62.4. In Brisbane, the rate was 52.3, Adelaide 67, and Canberra was 55.2.
Let's talk politics for a minute, Adam, because the federal election, your eyes actually just lit up then. As soon as I said that, you're like, oh, here we go.
Well, we've done American politics. Now this is the Australian landscape.
We're bringing it back home, aren't we? This is all local, and this is very populist stuff, you would think. It feels to me like the federal election campaign actually got off to an early start. I mean, the election hasn't even been called yet. We don't even know when it's going to be. We know it's going to be sometime in the next 6 months. But it feels like we've already started because over the weekend, Labor went all in on education. Every student will have every kind of tertiary student, that is, will have their debt cut by 20% at a cost to the budget of $16 billion. And there'll be 100,000 fee-free TAFE places every year. This is all under an Albanese government plan that will go to the next election. It sounds an awful lot like this campaign started, right?
Yeah, Michael, that's absolutely true. Over half the world has gone to elections this year, like India, the UK, and obviously the USA this week. This one's back to Australia, and as you say, it'll be in the next 6 months. Before May 2025, or by the end of May 2025, this election has to happen here. Prime Minister Anthony Albanese announced a proposal yesterday. And under this proposal, every Australian with a student debt, including HELP, Vet Student Loan, Australian Apprenticeship Support Loan, and other income contingent student loans will be cut by 20% from June 1 next year. That would wipe $5,520 from an average HELP debt of $27,600 for a university graduate. Now, already the government has capped the rate at which a student loan can be indexed, and that's been at a cost of $3 billion. The government also announced other smaller initiatives over the weekend to help former students with loans, as well as those 100,000 free TAFE places every year. Now, this is a major play for younger Australians, many of whom may be sympathetic to the Greens, Michael, and this is, of course, ahead of the next election due by May 2025.
Now, Adam, the local market dropped on Friday, and I suppose it will be in a bit of a holding pattern, won't it, until after the US election results, based on what we were saying earlier in the show?
Yeah, Michael, I think that's right. On Friday, the S&P ASX 200 finished down 0.5% to 8,119 points, having fallen to its lowest point in 7 weeks. For the month of October, the market is down more than 1%. The financials led the market lower. Energy stocks were among the strongest, and they were helped by a surge in the price of oil as tensions in the Middle East flared up.
Immediately after the show, we've got a great interview. Whenever I say we've got a great interview, it sounds as though this one is particularly great. They are all great. Today's chat is with Joe Davis, Global Chief Economist at Vanguard. Now, Vanguard is obviously an investment giant, global investment giant, and Joe Davis is the Global Chief Economist. He's in Australia just for a few days. We grabbed him for a chat, and he talks about everything that can have an impact on financial markets, from the US election kind of right through to AI and other mega trends, as they call them. So this is a must-listen conversation. It's coming up after the show. But Adam, this story, I saw this one coming through late on Friday afternoon, and I find this quite extraordinary. More than 1,200 of Australia's biggest companies paid no corporate income tax in the 2023 financial year, according to the tax office.
Yeah, Michael, this one's really interesting, and it's somewhat strategic because you look at it as though there's revenue, there's cost, there's profit, and obviously taxes on profit. The latest annual tax transparency report shows that big corporations paid more than $100 billion in tax. That was up 17% from the previous year. The oil and gas sector alone paid a combined $11.6 billion of that. High commodity prices, project production cycles, and $4.3 billion realised through the ATO audits. Anti-avoidance programs and compliance checks in that sector drove the result. And this is according to the Australian Financial Review. At nearly $55 billion, miners paid more tax than all other sectors combined in the year and paid 5 times more than they did 8 years earlier. What a change.
Yeah, indeed. Now, I mentioned this at the top of the show, Adam. A trial of Microsoft's Copilot by almost 5,800 federal employees shows that public servants can save an hour a day on average by using AI. I think that is amazing. That is a significant improvement to productivity, right?
Yeah, it's a big sample, Michael. 5,800 federal employees, and that hour a day includes the time it took to check the output of AI for its accuracy. So that was fact-checking the machines, as it were. It's the largest trial by any government in the world, and it was based on using ChatGPT. Those who took part said it boosted productivity for simple tasks such as searching and summarising information and analysing preliminary data and even writing or reviewing programming code. And that's according to another report in the Australian Financial Review. It wasn't all good news though, Michael. In some cases, Copilot allows them to access documents that staff had not classified or stored properly. The digital transformation agency that ran the trial said that overall, a significant proportion of participants were optimistic about their use of Copilot, and about 3/4 of participants who received 3 or more forms of training became confident in using AI.
I actually really like that story because it says an awful lot about the potential for this technology just to improve productivity and efficiency. That really you can get through a lot of those basic tasks and leave the human mind and those human minutes and hours for the ones that are really kind of challenging and need the creativity, need the problem solving that only people can really do.
Yeah, and then of course to check the work. Like you don't just do it and sign off, you got to check it.
Gosh, I think it's fantastic. COVID deaths remain high, far above fatalities from other respiratory illnesses, and it remains the leading cause of respiratory infection mortality.
Yeah, Michael, and you did a great review of the report into how we handled COVID-19. So in the first 7 months of this year, there were almost 4,000 deaths related to COVID-19, and that is 5 times the level of influenza deaths. The trend is down, but there remain many COVID-19 fatalities. This year, there were fewer deaths between February and April, according to the ABS, but then there was a spike in May and June before falling again in July. Now, typically, it's older males dying from the disease. Influenza deaths have fallen during COVID-19, but they are back around the pre-pandemic levels.
Now, last one, Adam, before we get to international news, Macquarie Group has reported a 14% jump in net profit to $1.6 billion for the 6 months to the end of September.
Yeah, Michael, that part is good news. However, the figure was down 23% compared to the March 2024 half and was below expectations. Macquarie's share price fell 3.6% on Friday to $223.20. A highlight was higher management fees across the business. Macquarie extended its $2 billion on-market share buyback for another 12 months. As of October 31, the company had purchased about $1 billion under that program. Chief Executive Shamara Wickramanayake did not provide detailed earnings guidance and said the investment bank continues to maintain a cautious stance with a conservative approach to capital.
Turning to international news now, Adam, and Kemi Badenoch became the British Conservatives' new leader over the weekend, the first black woman to head a major British political party.
Yeah, Michael, what a change. And she promised to return the party to its founding principles. Badenoch, who is 44, replaces former Prime Minister Rishi Sunak and is pledged to lead the party through a period of renewal after its resounding defeat at Britain's July election, saying it veered toward the political centre by governing from the left. And that's according to a report on Reuters. Badenoch becomes the Conservatives' fifth leader since mid-2016 after winning 57% of party members' votes in the final stage of a months-long contest that saw a field of 6 whittled down to just 2. She beat a former immigration minister, Robert Jenrick, who won 43% of the votes. Good luck to Kemi Badenoch.
Yeah, indeed. Last one, Adam. Warren Buffett has further cut his stake in Apple as part of a selling spree that has seen his Berkshire Hathaway company dump $166 billion worth of stocks over the past 2 years. Just get your head around that number for a second. $166 billion. That is staggering, right?
It absolutely is, Michael. And look, the so-called Oracle of Omaha, Warren Buffett, is also struggling to find opportunities on Wall Street in general, and that's according to a report in the Financial Times. Buffett has now ditched almost 2/3 of his stake in Apple, which at its peak in 2023 accounted for $178 billion of the company's stock portfolio. The stock shares are a dramatic shift by Buffett, given in 2022 he described Apple as one of Berkshire's 4 giants, accounting for the bulk of the company's value. Berkshire reported on Saturday that it had generated gains of $97 billion on the $133 billion of stock that it had sold this year. What a profit level. Now, after taxes, that amount will get down to only $76.5 billion worth of growth, and a big payoff for the group. Berkshire has about $325 billion in cash. And I'll leave the last word on the Apple trade to a Berkshire shareholder, J. Stern & Co.'s Christopher Rosbach. He said, and quote, "It is still the greatest trade of all time by the greatest investor of all time," end of quote.
That's a pretty good way to finish the show. Up next, Adam, is Fear and Greed, the week ahead, featuring our resident economist, Stephen Koukoulas, who is excited at the best of times. But he is beside himself with the fact that we've got the Reserve Bank Board meeting tomorrow, and we've got the US election, and just it's just a big week for the economy. So that's coming up next, followed, of course, by the Fear and Greed Daily interview, and Joe Davis, Global Chief Economist from Vanguard, is Sean's special guest today. So a couple of great pieces coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Adam.
Thank you, Michael.
It is Monday, the 4th of November, 2024. Make sure you're following the podcast, and please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.